The consumer is proving to be ridiculously resilient.
Yeah.
You keep seeing it. Inflation prices are not moving because consumers are spending. You're seeing consumption continuing to go up in most sectors, hotel prices. So all of these things continue to remain high. The consumer is continuing to power through.
Why? Given the fact that they were supposed to run out of their stimulus check money about 6 months ago.
Well, I think there's a couple of factors. I think one is irrational. So I think there's still a lot of COVID sort of pent up of we rationalize. I didn't take a vacation during COVID, so now I deserve this. I know this is expensive, but I deserve this. So there's part of that. The other part is, particularly among U.S. consumers, which are driving a lot of the economy, interest rates are not impacting them dramatically. They locked in very low mortgage rates. And so that rising rate, they don't have a lot of variable debt. And so that is not taking a lot of pain in their wallet.
But the interest rates are beginning to affect them as well. When I look at revolving credit, when I look at auto loans, when I look at all kinds of areas, I appreciate that the lock-ins on the 30-year mortgage rates, brilliant for many Americans. It's insulated them. But in other areas, it's creaking.
So we take a look at that pie chart. That mortgage piece is by far the majority. But those other pieces are where we're beginning to see cracks. So we are beginning to see credit card delinquencies beginning to rise, not a good sign. And obviously that's at a much, much higher interest rate. The auto sector beginning to cool off, prices coming way off of what you had seen during COVID, particularly the used car sector, way down. And so all of that, I think, is speaking to a little bit of that.
Yeah.
How much of this now is about government policy, though? And I know we're speaking again about the Fed, etc., but there's only so much that they can do. I mean, a lot of the hikes or even cuts that might come won't necessarily impact autos or fire insurance, for example. It won't impact auto repairs or any of the EV issues that are at play in and around the US. Is it now going to be about where government policy stands? I mean, their aim is always to just boost the economy.
Generally, I think that's true, particularly in an election cycle. So you're going to have the incumbent wanting to make sure the economy is as strong as possible as he's heading in for potential re-election. So a lot of efforts around spending, whether it's infrastructure spending, which continues to be pretty significant in the States, whether we're continuing to roll out new EV policies to try to boost more spending around that, and all of the sort of the distribution of power that needs to be sort of done as a result of that. There's real effort to try to put sort of the thumb on the scale of that economy to keep it going.
On the side of that, though, you have the national debt situation. I mean, if you're spending so much, that becomes a big issue, right? I mean, national debt is at $34.2 trillion. $3 trillion since May alone have basically peaked up. I mean, do they need to rein that in quite significantly as well?
I think the answer is yes, but Americans have no longer cared about this for a while. I mean, it used to be one party cared about sort of spending and reining in the debt, and that's just not as true as anymore. You sort of look through sort of the media and what the actual sort of election populace is thinking about. That is not what we're talking about in the States. We're talking about border security. We're talking about abortion rights. We're talking about sort of fundamental pieces of and we should be talking about the national debt, but we're simply not.
Then why